tonight we got a lot of fun topics to cover, but the number one kind of program that we use to make affordable homeownership possible for our clients is the USDA Direct program. And for a year and a half now, I've been doing, maybe it's that, I don't know. I've been doing this class by myself. When we first started doing this, we had senior loan specialist Tisha Schofield with us every month to talk through the USDA Direct program. It was like this really cool thing to have.
Yeah, it was great.
It was a lot of fun. Tisha could talk to, half of her pipeline in an hour, and she was super efficient. And then, the government said no more marketing for the Direct program because they didn't have any money, and now they're allowing it again. So we're excited to have Tisha back. So anyway, Tisha's real. She may underwrite or process your loan. She's an amazing resource to have here tonight, and it's really great because I'm here typically doing this on my own, and so I say the right thing 90% of the time. I don't know, some more than half of the time I'm right. And so it's helpful to have Tisha here to course correct me, because you all have to remember, me and Justin, we're not loan officers or underwriters. We don't work for USDA. We are lowly realtors. And so it is helpful to have the OG from USDA, which is Tisha, because you've been there how long, Tisha?
18 years.
Yeah, there you go. Right. She built, USDA in Oregon is built on Tisha Schofield and Renee Robinson. So
that's right now, yeah.
And it's held up by you two ladies, essentially. So we're so excited to have you here. Thank you for coming.
Of course.
To that end, while we're going to get into a slide deck, Justin, a lot of phones say, Justin Marbury, if you're here, a lot of things say iPhone. And so I don't know if you're in the room or not. But if you are, please turn on your video and reveal yourself. Justin was going to try to come tonight. I don't know if he's going to make it. My brother, Justin Gina, who many of you are working with, is with us tonight. But as we go through the slides, if you have questions that come up, please go ahead, type something in the chat, raise your hand, open up your mic, and interrupt us. All those things are welcome, because we have 45 minutes of Tisha's uninterrupted time. And so if there's questions we want to ask her or scenarios we want to run by her, we can take advantage. How cool.
We do have one. I talked to Shelley Wood and Charles Neal earlier today, and they had a question on their income. So when we are going through income, I emailed you their most recent pay stub, Jake. It's in your email. They just wanted kind of like an idea on if they're on course to make too much money this year or not. So I figured it'd be a good thing to look at.
Yeah, okay. The question, and I don't even need to look at the pay stubs because she was under income on her own. She was under limit. As long as he's still a full-time student, they're good to go. So I don't know if you addressed that in your email. I should be able to pull them up real quick. I think you know what's funny, while I'm pulling them up, give me a half a second. I'm so fast, unfortunately, that I processed almost all the files that are in the pipeline now waiting for specialists. So I overachieved just a little bit. So I'm, they can't get to everybody because I did so many, is kind of weird too.
You've overloaded the other two ladies. Let me just explain the hack that is, Justin, is that scenario right, that one of them is going to school?
I think Charles is not working at all. Charles, I think you're in chat if you want to clarify that. Yeah, I think they're in the chat right now.
Oh, I see.
Are you? Yeah. So, as long as he's still a full-time student, I'm almost there. It just takes me a half a minute.
Charles and Shelley has been working more hours with overtime. So let's take it from a more general situation.
Yeah,
so if the main income earner, Tisha, works full-time, and then they have a season of overtime that might change their projected income for the year, how would USDA handle that situation?
We do a 2-year average because that seems to be the fairest way. 1 year they may do really good, and the next, just like self-employed. We kind of treat it like self-employed. We don't want to penalize somebody for doing good if we can avoid it, right? So in a situation like that, we're going to look at the year-to-date to see if it's outrageous, but typically we're just going to go with the two most recent years. So it'd be 24 and 25. This would be similar to somebody, say, who works in the trades. We take a 2-year average where we can, because again, we want them to qualify. You don't want to say, well, yeah, this is typical income, but you've made $100,000 this year. That's not what we're here to do. We're here to make loans. So we're going to try to accommodate that.
Gotcha. So, okay. So if you're trending to, because of overtime, to like be well over the income limit, you could disqualify yourself. But if you're trending like just to barely be over and you don't have a history of overtime in your last 2 years, you can potentially be okay. It's going to be there's a judgment call here, right?
Yes.
Like you can't go and make, so we have a new income limit of $78,000 in Jackson County. You can't go make $78,000 in 6 months and just say, I averaged $70,000 for the last 2 years. I'm okay, right?
Right.
There's a reasonableness that will disqualify yourself. But if, you've made, because the income limit's 78,000. If you made $40,000 in 6 months, you're trending to 80. You might be just over, but you don't have any history of doing that. And we don't know what your overtime is going to be for the next 6 months of the year. Maybe you just had you had a busy summer because you're in a trade that's busier in the summer than you are in the winter. That's going to be accounted for. Is that fair, Tisha?
Right. And if you have something like that, when you, I know you're all saying we're on the wait list for 2 years, but when you submit your package, or let's say we ask you for updated pay stubs, let's go with that.
Sure.
Submit a letter with it, even from the employer. They had prevailing wage, where we don't have that contract anymore. We don't plan on getting that contract anymore. We had like you said, we had something, something come up, and they all got an extra 100 hours of overtime, 200 hours overtime. Again, we don't anticipate that. If you address that right up front, excuse me, the smoke is really getting to me, then we don't second guess. A lot of times we'll ask you for your final pay stub from the year before. That's so that we can average stuff like bonus and overtime and that kind of thing.
Which is why, they're not being super picky when they ask for that end of 2025 and end of 2024 pay stub, end of year pay stub. What they're looking for, your overtime doesn't show up on a W-2. Bonuses don't show up on a W-2.
Right.
And so they need that to sometimes give you credit for it, or to not give you credit for it so you don't disqualify yourself.
Exactly.
So that's the nuance of that.
Yeah.
Forgive me, Justin, did you step into the room? Justin Marbury? I'm not sure. We had a couple more iPhones to turn on, but either way. Okay. Let me, and you guys, if you have more questions for Tisha, put them in the chat, interrupt us. Totally fine. I'm going to just get into the slide deck so that we try to stay on time, because we got a lot of fun topics to go over tonight. Okay. You guys can see my slide deck. The right house can change your place in line. Tisha, I know Renee's going to love me talking about this sort of thing.
Yeah.
I'm already her favorite person, I can tell, at the office. Okay. So we have a big topic to cover tonight. But before we're kind of covering two things. We're going to talk about the HSS grant, which is what a lot of you are in line for. This is the $150,000 grant that if you were living in Jackson County as of Labor Day 2020, you're able to use that to knock $1,000 off a mortgage payment. It's life-changing stuff. We have a lot of details we're going to cover in that. And then we're also going to get into a loan assumption for a USDA direct loan and how that can go ahead and allow you to potentially skip the line. So let's get into each one of them real quick. First, the HSS timeline update. We have been talking to the folks at Access. If you're in this room and you are hoping to get your hands on this $150,000 of free money, they have hit kind of a bottleneck. Because they had a whole bunch of people very early on in the process apply, and then what happened is they had one person down at Access, her name is Socorro, who was issuing the letters for people to go ahead and get pre-approved and go out with their HSS pre-approval letter and shop for a house. Well, she is also the same person that is now assisting with the underwriting process for folks to go ahead and once they get under contract with the house. Tell me if this story doesn't sound familiar, Tisha, going from issuing pre-approval letters to underwriting things and having your timelines, get messed up.
Yeah.
She has essentially had all of her attention now divided between, initially just doing initial processing to now underwriting folks who are under contract, because she sent out all these letters. Now there's all these people under contract. And then in addition to that, they're what we call, this is a USDA term when we talk about priority. In the HSS world, they have these priority 1 applicants. All the marketing they did for the HSS grant for Royal Oaks, trying to get people into free homes, that brought all of these fire affected families into the woodwork, and out of the woodwork, I should say. And so people who they did not even know were fire affected started raising their hands saying, hey, my home burned down, my rental burned down, what have you. And those folks, that's what the HSS grant was originally designed for, was to help families like that. So they're pushing them to the front of the line, and they are taking up another piece of that funnel and a piece of Socorro's attention. So if you're waiting in line for that grant, you would start off by talking to the CCR. You do an initial appointment with them for intake. They refer your file over to the Homeownership Center where usually you'll get a greeting call from like Diana or Angeline. And then it had been the case that after a couple of weeks, you would hear from Socorro. She would schedule your appointment where you would go ahead and get your letter to go shopping with your $150,000 of assistance. That timeline from when you get sent over from CCR to the HOC and you hear from Socorro has gone from a couple of weeks to a couple of months. And because I know this because people who had their CCR meetings in early July are still sitting here a month later and they have yet to get their next appointment scheduled. It doesn't mean that they're out of money. It means that they're bottlenecked. Essentially, Socorro is now underwriting files for people who are in contract rather than just scheduling appointments and getting letters out the door. So they're asking for a little bit of grace from us because essentially in the same way that USDA is sitting on Tisha and Renee and Brittany's shoulders, the HSS grant is solely kind of sitting on Socorro's shoulders. And after you talk to Socorro, the underwriting is done in partnership with Malcolm at OHCS, someone else that you introduced to later. A point of confusion, because if you're waiting on the HSS grant and you get, transferred from one department of access to another, from the CCR to the Homeownership Center, the HOC. The HOC requires HUD counseling, which is something they traditionally were doing once you're in contract, but because their wait times are taking longer and they're trying to, they don't want people to get this $150,000 grant if they can't go spend the money. They are now reaching out to people and doing the home buyer education counseling, the HUD counseling. They're doing that sometimes now before you hear from Socorro. So if you hear from someone at the Homeownership Center at Access because you're waiting on this grant and you're like, oh, but you're not Socorro, I'm so confused, what's going on? They may just be trying to get you in there for counseling, to make sure that for homeownership counseling, to make sure that all your numbers are good before you get moved on to Socorro. But know that when you hear from Socorro, when you get your appointment scheduled with her, that's effectively the date when you're going to be able to start shopping. And we're going to get more updates on this next month. The main gal down at Access that we talked to about this, Denise Lupton, is on vacation this month. And so I don't have a sense of like how many seats are left on the bus for, how many more people are going to get the grant and things like that I would normally like to have for this sort of update. But the big takeaway from CCR to HOC, that handoff process is taking a couple of months. We expect, at least a 6-week process before you go ahead and hear from them. So just know that that's the case. Okay. If you have a question about that, you can put in the chat, raise your hand, poke me. I know we have several people in this room that are feeling stuck, and I just want to affirm, yes, you are stuck. Shauna, go ahead. Unmute yourself, Shauna.
I was just going to type it in the chat, but I was just trying to figure out, since I already met with Socorro, I don't have to worry about all that, right?
No, you have your grant. You have your letter in hand. You're
That's
one of the. You're through all of that, right?
just-
So you're one of the lucky few that's like, the earlier you started that whole process, the better off you were, because there are people that have the grant and have that grant in hand like yourself that are out there shopping and have 6 months to go get a house under contract, right? But then there's other people that explanation was for the folks that are mid-process, essentially. So we got probably a dozen people that are in this class that are stuck between that referral and waiting to hear from Socorro. So, okay. Thank you, though, Shauna. USDA Direct assumptions. Let's talk about this real quick. So we've talked about priority timelines before. And if you're not familiar, when we talk about priority, USDA processes people from priority 1, 2, 3, 4, and 5 status. The lower your priority when you apply, kind of the slower they get to you. They take applications first based off priority, then based off veteran status, then based off date of application. Did I just do that right, Tisha? I think I did. Yeah. Okay.
Yes.
So if you, and traditionally, if you're a new applicant, the highest priority level we can get you is a priority 3. Priority 1 is like your house is getting foreclosed on, or there's a hole in your roof and you're trying to get a supplemental loan and USDA is concerned about its collateral. We don't really do priority 1s. It's kind of for people who are already in USDA direct houses. You're not doing a purchase usually as a priority 1. And priority 3 is what we are always pelting you with questions about early in the process. This is the line of questioning, is your home structurally unsound? Do you have 5 people living in a 2-bedroom house? Are you living in your car or in a fifth wheel? Do you have issues with heating or water in your home? Like something that's making your home uninhabitable, and it's been that way for 6 months or more? USDA will essentially put you in priority 3 status and put you at the front of the line. And what we tell people, because a normal applicant is a priority 5 applicant, that's just a general applicant. We tell priority 5 applicants that it's a 3 to 5 year wait. The priority 5 applicants that we've helped close this year started the process with us in 2023. And generally speaking, the wait has gotten longer, not shorter in that length of time. The priority 3 applicants, people who were like living in their car for the last year, who have applied, have usually gotten helped in about 9 to 18 months. So the wait time for a priority 3 person, who's got their family of 5 or 6 people living in a 2-bedroom house, sort of thing. They're overcrowded by USDA's definition, and they're living in their car. They're in a home that doesn't have heat, sort of thing. These are all things that rise to the level. They don't have a working septic system. That's a really fun one. These are all things that rise to the level of going ahead and, getting kind of bumped up to the front of the line. And we always ask about all this stuff. But in the last 3 months, we've discovered this thing called priority 2 status. And it's nothing that we've done. It's actually something you guys haven't done, Tisha, right? Like in the 18 years, this is like a new thing, right?
Yeah, we've never.
Yeah.
It's something that used to be very prevalent, maybe 25, 30 years ago. In the old days, people used to come in the office and put on a bulletin board, I'm selling my house.
Mm-hmm.
Well, we don't have that option anymore. We're not, we're not field offices anymore. That just happens to be where we work, if that makes sense. So, yeah, it's just, I've never even heard of anybody doing it, quite frankly.
So, of course, because, they've never heard of it, we're trying to do it. And so what it is, a priority 2, for layman's terms, we're just going to use this. This is not perfectly correct, but it's a good summation of what we're doing, is what's called a loan assumption. And this is where a seller who is selling their home has an existing USDA direct loan on their house, right? Like, I bought a house with USDA Direct, however long ago. I want to sell my home. If that seller has a USDA Direct loan and you come along as a buyer, you can and want to use a USDA Direct loan, and we can marry you two together, a USDA Direct buyer and a USDA Direct seller. You can get a new rate and term, like a new 33-year or 38-year mortgage with whatever the current unsubsidized market interest rate is. Right now it's 5.25%, and have it be subsidized down to 1%. And you can go ahead and you can have essentially that mortgage transferred from the old seller to you. Now, there's some nuances to this that I'm not covering. It behaves slightly differently if USDA has funding than if it doesn't. and that can impact whether or not you have to bring money to the table. There's this idea when you're doing a loan assumption of a funding gap, meaning that you have a house for sale for $324,700 and you have a loan for $300,000 on the house. So that means there's a gap, $24,700, right? The existing loan is for $300. It's being sold for $324,700. There's a difference there that has to be covered. In a traditional loan assumption, you bring $24,700 to the table and get that loan transferred to you. In this case, because USDA is always looking to spend every dollar that they have coming in their door, because they care about spending all the money so they can get budgeted money again next year or more, sort of thing, they want to issue a new loan for the previous balance and for the gap, as long as that purchase price is under that loan limit. So you can still get the same 100% financing that you traditionally get on a regular USDA Direct purchase. But here's the key thing. If you can marry yourself, I don't know, that's the wrong word. If you can tie yourself
metaphorically
to a seller. Yeah, don't just go start marrying USDA Direct homeowners. That's not what we're proposing here. If you can metaphorically tie yourself as a buyer to a USDA Direct seller, you don't even have to have applied. And the timeline is less than 120 days, we think. And we don't know because we're doing it right now for the first time, right? Like we're shooting for 90 right now, Tisha, but like we're going to figure it out.
I think that's overestimating. Renee and I tend to have attitude. So it's making sure we don't have attitude because we want everybody to buy a home. I do want to go back to the equity gap thing.
Sure.
People are not expected to take that money in. They get a subsequent loan. So they'll have 2 liens on their loan on the property if they qualify.
Yep.
So even though there might be a difference, it's still going to...
it's effectively still 100% financing.
Yeah, say it's 100% of the sales price, not 100% of what's owed.
Right.
If that makes any sense.
Yep. So at the end of the day, as a buyer, you can still go buy a house with, with no down payment, 100% financing, whether it's a loan assumption or whether it's a, whatever. So, but the cool thing about this is that, well, in here, I'll come back to it. There are houses for sale in Oregon right now that have USDA Direct loans on them. And the sales prices that they're selling for are close to or below the area loan limit. Remember, in Jackson County, we have a loan limit of $324,700, but that's not where it is all throughout the state. Like, what's the highest part of the state, Tisha? It's like 4 or something?
Yeah, I don't have that off the top of my head, but it's 4029, I think.
USDA Direct loan limit. Our friend Google will answer this for us. So USDA does, that's income limits. I don't want income limits. We're going to get into income limits in a second. They just went up. Here it is, area loan. Everything's done with eye charts with USDA. You can't work at USDA and either not have glasses or have perfect 20/20 vision.
We don't always use this stuff, but it's helpful.
Oregon, Ohio, almost there. Oklahoma, almost there. Oregon, 457,400 in Hood River, 431,200 in Clark County, 420,900 in Clackamas County. So
I had it backwards, that's all, but I had the right numbers, just in the wrong order.
So most of the state is 324,700, but you have a few of the higher value markets around like Portland or Bend or Benton County, I think is a higher one. Yeah, 369. Where you can have a higher purchase price. And so what we're going to do is we're going to add this to our monthly USDA Direct, our monthly #university classes. And we're not promising that you can buy these houses with a USDA Direct loan. Probably the listing agents that are selling them have no idea that they could sell them via loan assumption to a USDA Direct buyer. In fact, the sellers probably don't even know, but we know that it's possible. And if they're having trouble selling, they may be up for, because remember, it's a little weird. They may be up for a slightly longer escrow to get their home sold 60 to 90 days, and possibly even to a buyer who's not even been underwritten yet, to go ahead and get the same cool thing that they got. All these people got houses with 1% interest rates and 33-year terms or 38-year terms and no mortgage insurance. And if you're wanting to live in Carlton or Athena or McMinnville or Roseburg, we're not promising these could work, but these are kind of sitting the right way to possibly work. Looks like that Roseburg house needs a paint job. So anyway, we just wanted to share that because we've never been able to offer to folks a path to do a USDA Direct purchase in a couple of months. And theoretically, now that's possible. And it's a great reason to come to the classes and wait in line to see, hey, maybe there'll be something in a part of the state that you're looking to live in. We don't have anything in here in Southern Oregon right now. It's not like there's 4 people in the entire state that are raising their hand saying, hey, listen, I'd really love to give up my 1% interest rate, right? Like there's not like a ton of people that do this, but there are some, right? And we'll make sure we tell you about them each month. So anyway, I wanted to go over that. And then I also wanted to go over how our income limits in the state of Oregon have changed. They just went up in July. Every year, in roughly the spring, around March, we see loan limits adjust. This year was a very sad year. We saw loan limits go down for the very first time ever. Went down from 410,000 to 324,000. But our income limits have stayed where they are or gone up. And so as of July, we now have an income limit of $78,500 in Jackson County and $67,850 in Josephine County. It's higher in other more expensive parts of the state. If you were looking to do the program in, around Portland or Bend or something like that, you can make even more money in those areas. And if you have a larger household, you can have an income up to the low 6 figures. You have 5 people or more in your household, you can have an income up to $103,650 or $89,600. We're sharing this in part because you care about this even after you buy a home, because you can be, let's say, just under an income limit when you buy a home, and you get maybe let's say a job raise, you get a little adjustment up in your income. As long as that income limit also adjusts up, you're not going to lose necessarily all of your subsidy. Remember, there's 2 rules that we're always trying to satisfy with USDA. USDA wants to see your income be under the income limit to get the 1% interest rate, and they want to see that monthly payment be no more than 33% of your income and at least 24% of your income. They want it to bounce between those 2 numbers. And we've had this happen where clients will go ahead, go get a house with USDA Direct. They get pay raises. They make more and more and more money, and they're able to keep portions of their subsidy or all of their subsidy, because as they make more and more money, that income limit is still going up. And as their income goes up, they're not making more money than the income limit is going up by, if that makes any sense. So we have more money that you can make and still qualify to do the program, which is an exciting thing. That is everything I had for the slide deck today. But does anyone, since we got her here, and it's such a special thing, does anyone have any questions for Tisha? How do we find a USDA seller? You come to the class, Michelle. We're gonna cover it each month in the class. If we find something that's local here, we may even try to send out a special announcement so that people can know about that, because, obviously, you don't want to wait on a house for 3 weeks, sort of thing, if we see something go live. Okay, it looks like there's a bunch of questions that did pop up. Charles, did we find out if USDA Direct can pick up my app? That's a Shauna Duffy question. Shauna was a priority 5 or 3 applicant, and she was wondering if her application got picked up for processing, was her question.
Depends on her fiscal year. We haven't really even touched fiscal year 26 yet. We're starting fiscal year. We're back to fiscal. Well, I've roped in somebody from Wyoming, believe it or not, to process, who works at a service center in Wyoming. They're not very busy, surprisingly enough. there's only 500,000 people in the whole state. So hopefully I can get her trained to do it the way Oregon does it, because everybody does it a little different. So hopefully some of those will be.
Yeah, so she looks like she's a
available.
2025 priority 3 sort of thing.
Let me open up the database.
We have
not picked up all the priorities yet out of fiscal year 25 because we just haven't had time yet.
Yep.
What's her last name again?
Shauna, it's in there, I think, is
Duffy?
DY. And this was a question from Taryn. Does a person on permanent disability have any type of priority for USDA Direct? I can answer that question for you, Taryn.
Okay.
Unfortunately not. The way applications are processed are, for priority purposes, is priority level, which doesn't give an account for disability, unfortunately. And then VA status, veterans in a given priority level are always served first, and then date of application. So
there's no way to differentiate that, because then everybody would come in disabled. So everybody would have that same priority too, which a good percentage of our clients are disabled. Shauna, your file came in fiscal year 26 and we have not gotten to those yet.
So she is after October 1st
Yeah,
of 2025.
she's January 26.
That's what it is. Okay. So that and now that I think about it, that's right. So that's why they haven't gotten to you yet. They haven't even gotten to all the 3s from 2025.
Right.
I can double check on your question about that Ashland house, Taryn. I almost definitively want to say the answer is no, but we can double check. Would you be able to convince the USDA Direct to pick up my application since I have the HSS grant? Well, that was the same Shauna question. Okay. Yeah. So Shauna, we're waiting on them to get through 2025 files first. Matar, how do you sign up for HSS? Matar, I can send you an email with the steps for that. Applying for HSS now, I wouldn't discourage anyone from doing it, because at the end of the day, it's just paperwork. Certainly the amount of certainty that is attached to an HSS application now and starting that process to get your hands on that $150,000 of help, there was a lot more certainty attached to that 6 months ago when I started talking about this than there is today, right? So that may not come to pass. There's a lot of weirdness in HSS in that there's only 50 seats for people who get that funding, but that could change. Like they're talking about getting more funding for the program. There's also potentially, the Trump administration, I'm not saying this is going to happen, but the Trump administration, we're a blue state, could get mad at us for some reason and say, all that funding has to go away, right? And something weird along those lines could happen. We saw this with the HARP grant. There's a little over 100 people that lost their homes, like their home burnt down during the fire. They got between $150,000 and $300,000 to go buy a house in Southern Oregon with the HARP grant, separate from HSS. It's a different program, far less restrictive than HSS. And about 1 in 6 of them did not use that money. Like we have about just shy of 20 people walking around with $300,000 who are not cashing in on that check to go buy a house in Southern Oregon right now. And some amount of that will also be true with HSS, because HSS is even more difficult to use than HARP. You have to qualify for a loan. You have to have your credit score where it needs to be. You can't have too much debt. It's picky about the home, like USDA Direct is, right? And it's also, like USDA, very income restrictive. They have an even lower front end ratio of 30% compared to USDA Direct's 33%, which is by many lenders considered ridiculous, right? Like people think about USDA, oh my gosh, that front end ratio is so low. How do you buy anything? It's even lower with HARP. With HSS. And so we're very much in a place where we expect somewhere between 5 and 10 people who have HSS grants not to use them, because it is hard to go buy a $300,000 house with the HSS grant right now. And that's where a lot of people are falling. And so there may be people that get to the end of their 6 months, just like there was with HARP, don't use it. And then that seat opens up to someone else. So I just tell people, hey, know that in this late stage of the game, if you're starting the HSS grant process, please do it. Also, please know it's taking forever. Also, please know you may not get it. Also, please know it's hard to use. Also, please know it's going to feel like you hit a full court shot if you do get it, sort of thing, right? So just anyway, I'll email it to you. Let's see here. I think that is all of the questions in the chat. Does anyone else want to open up their mic or have any other questions for Tisha while we got here? Guys, it's Tisha Schofield, Denise Buckaloo. Sorry, Denise was just wanting back in. Tisha, here, I don't have this on the slide deck, but maybe we want to take a second to talk about it. Have you memorized, maybe to asking too much. There was a new procedural notice that came out last month, and maybe the biggest piece of it had to do with how USDA is going to start treating student loans on deferment differently. Do you have that in your head?
If there's no payment on the credit report, we're going to take 0.5% of the total principal balance, no matter who you are, even if you're in deferment.
So this is a big deal because USDA...
It's awful. It's awful.
USDA was the only lender in town that, regardless of how much student loan debt you had, if it was in deferment or you had like a really, small income-based or income-driven repayment plan, they would honor that as long as you had a 640 credit score, right? So you could we had people that owed $200,000 in debt on a student loan and just massive amounts of money, right? And they went ahead and could get a USDA Direct house because if the income-based plan said 0, that's how USDA treated it towards their ratios. As of last month, if you owe, every $100,000 that you owe counts as $500 a month. Did I just do that right?
Not in RD, not in our world. It's 0.5%, not 5%. Yeah.
No, so 0.5. So 0.5 of 100,000 would be $500, right?
It could be, yeah.
Yeah.
We're being very liberal. We may be moving the decimal point the wrong way a little. Oops, did I say that?
Yeah, maybe we'll have to delete that part. So the long and short of it is if you have student loans, even if you're not making payments on it and you're waiting in line for USDA Direct, and it is a larger balance, this is a new thing that just popped up last month that we're having to contend with. It's probably worth raising your hand and reaching out to us and having a conversation to see how much of your ratios this is going to eat up. Because if you owe $200,000, that means that there's $1,000 a month of a debt payment. Not that you're actually making that, but they have to treat you like you have $1,000 a month car payment when they're trying to qualify you. And the way ratios work is that in kind of general speak, if you have a $5,000 a month income, USDA wants your mortgage and all of your consumer debt to fall under 41% of that $5,000 a month, right? Or to put it another way, they want all of that to add up to be no more all your principal, interest, taxes, insurance, your credit card, your student loans, your car payments, your washing machines, your alimony, your child support. They want all of that to add up to be less than $2,000 if you have a $5,000 a month income. And so if you go ahead and have a $200,000 student loan, and so $1,000 of that is now being eaten up by a student loan payment that they have to assign to you, even if you're not making it. And then you add a $400 car payment on top of that, you only have $600 left for a mortgage and you don't have enough room, right? So student loans if you have large student loan balances, have a conversation with us. That just got more challenging last month.
And I don't know if it's an option for them. I'm just throwing this out there is contact the servicer and see if you can set up a payment plan for $50 a month, instead of just letting it stay on deferred.
Can you honor what the payment is if it's less than 0.5?
Yeah, if we have it in writing, because those go on the credit report, the payment amount would show. They'd have to make the payment, but how many times did we ask?
That's the hack then, is what it is.
Yeah, okay. And again, I'm just throwing that out there. I don't know. I don't know if they accept self-reporting, self-asking payment plans, but that might be an option for to check into.
Okay. We are coming up at the end of the fiscal year. The fiscal year is going to be over for USDA in less than 60 days, right? On September 30th, October 1st. That's when the fiscal year for USDA ends. So we've talked about this before, but it's just worth briefly mentioning real quick. If you have a certificate of eligibility and are out there shopping, you're going to see they haven't clawed everything back to national yet, have they, Tisha?
The 14th.
Is when it happens.
Yeah.
Of August?
Of this month, yeah.
Okay. So this is material, and this would be a good reason for that assumption file for us to like get through all the steps on it, right? Because we'd be great if we can get the appraisal back before the 14th. That's happening quickly. So what happens after all? So if let's say you're under contract to buy a house with USDA Direct, USDA cannot assign the money to fund your USDA Direct loan until after the home inspection happens, until after repairs are negotiated, until after the appraisal is back. So if you're in the process of buying a house with the direct program, those things have to get done before like money can be set aside for you, right? And between now and the 14th of August, the state of Oregon is in control of the funds that it has available, right? Like it has piles of money for, do you have any low income left, or is it just very low?
Oh, yeah, we have both.
Okay.
Yep.
So we have money left at the state of Oregon, which is unusual at this time of year. And what's going to happen is all the money that's left over between the low pile and the very low income piles is going to get scooped up and sucked back to national. And when it goes to the national office, you can still go get money assigned to your deal to go happen. It just means that you have to go on something called the survey. And what the survey means is that everyone who's in the same boat nationally applies for the survey, and essentially everyone's file competes nationally for remaining dollars on a weekly basis based off of priority, veteran status, application date, and whether or not you're in the low or very low income category, sort of thing. So I say all that is that it's easier to close a deal when Oregon has control of the money. We've done lots of deals coming off the survey. The higher priority level, the less of a big deal it is. But all that being said, it's easier when we don't have to go ask for permission for the money, sort of thing, when we just have it and can say, this is your money. Go close your deal. Sort of. Is that a fair explanation, Tisha?
Absolutely. It's our version of the wait list.
Would you say it's your version of what?
The wait list.
Yes, there you go. Yeah. So, and then from August 15th until the end of September, everyone has to, kind of wrap up get their money assigned. They don't necessarily have to close, but they have to get past appraisal, get money assigned to their deal, sort of thing. You don't call it assignment. What do you call it? What's the word? Obligated. So money gets obligated to your transaction. And then come October 1st, there is no money because Congress will not have passed a budget, right? Unless they do something different than they've done every year for the last 25 years. The office
takes it, and then they use it for what's called patch outs. So that's somebody who obligated at 200,000, and then they need 20,000 more. So then that pot from fiscal year 25 feeds that kind of situation all year, all the next year.
And they did some weird stuff with the most recent budget year where they allowed some of the money from this year to flow into next year, if I remember correctly. Didn't they do that?
I didn't hear that, but I wouldn't be surprised. If they do that, yay.
Yeah, we'll have to update everyone on that, because that was something that was in we've not experienced it or seen it or even know how it works yet, but that was something that was in the 2026 budget, and so we'll cross that bridge when we come to it. Anyway, this has been a lot of fun. So good to have you back, Tisha. Right? I am, man. Yeah, it's like it's the old show, right? Like
it is. It seems weird.
Travel back in time for a year. Right?
Yeah, year and a half. Yeah.
Yeah.
Well, we're really grateful. Hey, you guys, be mindful, right? This is the only employee in all of USDA Oregon that's working right now, right?
For sure.
So everyone else went home at 4:00. Tisha's here trying to make sure you guys get educated. So appreciate you being here, Tisha. Thank you everyone for attending. We'll do this again first Wednesday of next month, and I think we'll have some closings to brag about too between now and then, which will be exciting. So
all right, well, thanks for having me. Thanks for being patient.